Let's start with the S&P 500. I noticed that if you look at a bear chart of the S&P 500, when we are in an uptrend, we would have 3 weeks down or 2 weeks down and then up, right? Doesn't last long, but only when the market starts to collapse, you have more weeks down than more weeks up. So the same principle here. You have more weeks up than more weeks down, going up, and then so far since July, the market has been falling three down, two up, three down, two up. Now we since October we fell uh, 2 weeks down. Right, this is the end of the second week. This is October 27th, the end of the last week of October. We have 2 more days before it ends, October 31st. But generally it's the last week. So next week we probably will have one more week down, or a doji like some coming here, this level here, and then some type of doji. Of course, it can have a big, huge spike too. We don't know. The reason why I say huge spike because Friday is non-farm payroll. Maybe we'll get a big, strong reaction from non-farm payrolls on Friday next week. So possibly a doji or just a spike right around the 4,000 level when we get to that level. So one more week down or a doji, and then market starts to turn around and go up. Looking at it from a monthly perspective, this is just a pullback, a big pullback. Because look, we have 3 months down already, 3 months down, right? And we are in an uptrend. So we shouldn't expect, 3 weeks the most in an uptrend. Here, back in 2011, we had 5 weeks, 5 months down, right? At most. So looking at the probability of this, after this month ends, we shouldn't expect another month down. We should expect by the end of next month, November, a little rally in the S&P 500. So let's go back to our weekly chart. Same thing, 2 weeks down, third week probably will be one more week down, right? Or doji, right? Also, what we can note is we have 3 waves down. 1, 2, 3, 4, 5. 1, 2, 3, 1, 2, and look, all of them hit equal legs, right? Like a thunderbolt. They hit equal legs. So we should expect the market to fall down and hit this level here, equal legs, and then pull back. Here, hit equal legs, pull back. This is how the market works. It reaches equal legs, then pulls back every time. Here, market pull back. Here, reach equal legs. We have a pullback. So that's what's going on here. We have 1, 2, 3, 4, 5, or A, B, C here. And A, B, we have C. Pullback. So this level is a big level of support here. If we're going to buy the SPY, this level here is our support. Last support, I think. And throwing in our indicators here, we see that we have a new trend that emerged. And this is indeed just a big pullback. in this trend, and the way it's pulling back isn't as strong as the leg up. We have a jaggedy pullback, a jaggedy retracement, right? And this area looks like the end of, it could be the end of the retracement. And we have cloud support here. So this could be the end of the retracement right here. And since there has been no new low, so this is definitely looks like the indicators are telling us the same thing, that this could be support. Our bottoming indicators are telling us that we are at an extreme already. We are at an extreme of selling. If we look at our MACD, we can see that, let's see, it's above zero. Let's look at the other indicators. We didn't diverge when we went up. But we can see here that we're already making hidden bullish divergence around here, this area. Looking at our histogram, same thing. We have hidden bullish divergence developing. We have extremes. So if we put this together, and if we draw fibs, from if we draw fibs from this level here, down in October 3rd, 10th, all the way up here, let's make the fibs bigger. We can see, yeah, the price went right through 38%, and it's approaching 50% level right here. So since it went through the 38% level, I'm going to move it. Just burst through the 38% level. Of course, it could rally back up here again next week, but just for now, just move it, because I think the market's going to continue to fall. The market, the S&P 500 will continue to fall to this level here next week. All right, so yeah, so we have a fibs here. It's a 50% level fib support, which lines up in confluence with our A, B, C wave down here. A, B, C down. This wave here is C. And we'll make it red. We'll make it red. So that's our C wave down. So this is where we can look for a buying opportunity. And a stop, of course, will go below this this level here, this low here, where the trend started. Trend started here in March, right? Made a new high here. Made a new high here. We have divergence here. So the market started to come up, and this will be our next level of support, this 50% level, 50% of the move from this low to this high. You know, I'm going to measure another fib from this low here to this high, see what we get. Interesting. We have the market is at a 50%, a 618 level right here, right at the tip. So this, you know what? This whole zone here could be support, right? This 618 level. Market could jump up next week, but if it doesn't, then we should expect to fall down here. So for now, I'll just keep it here. Right? It could fall a little bit and then come up. This zone here. So it's sort of in confluence with the 50% level. It's close by. It's close enough. Right? So we just make it down here. And the 78% level is down here. I'm going to ignore the 78% level. That's, let's ignore that one. I'll take it off. It does line up with our equal legs area. Right, take it off. Now, because we already know where we want to buy or see the market move in the opposite direction. Okay, so that's the S&P 500, and we have horizontal support, along here. Market coming up, finding resistance, coming up, finding resistance right around here. So we even have horizontal support in this area here. This whole area is support. So we have horizontal support lining up here. We have fib support lining up here. We have ABC completion support lining up here. We have a 5-leg wave lining up right here. We have 618 fib lining up here and a 50% fib lining up here. We have this will be considered the first pullback of a new wave up. This will be our wicked daddy, potential wicked daddy area here. Wicked daddy deeper pullback area here. We only need for the Heikin-Ashi candles to flip green for that, or just some type of reversal candlestick signal here. Okay, looking at the Nasdaq, I see the same thing happening with the Nasdaq again. The Nasdaq also follows these wave patterns. You have A, B, C equal leg. The market goes to these equal leg patterns here, right? A, B, C equal leg pattern. Right? And it does it again here. But it doesn't go to equal legs here. It doesn't catch it down here. So we ignore that. It does this. Basically, it's doing the same thing here. Sometimes it doesn't do equal legs. It just goes to 127% of another one. That's too far. Yeah, it doesn't go 127% either. Okay. Let's see. This was a support here, area here, and then it pulled back. And we'll also look to that level. Rejected off of the Kijun and came down there. Okay, so let's take off our Chiku span here. Taking off the Chiku span, I'm not analyzing it with the price. The Chiku span is still above the prices, right? It was above the prices. We have a new trend up, emerging up. And this is a big pullback. Looking at a monthly chart, same thing. It's a pullback. And our monthly Kijun is right around here. We have a buy signal on the monthly chart right here. And look, we have 3 months down. Looking at a weekly chart, I marked the monthly support here, just in case if the price falls down there, like really falls. We have A, B, C down here. They all meet together right here. So we're at the ABC level, ABC completion level. And this is the zone of the ABC completion level. So there's a possibility that the market can fall down more further here. So this level, which is a 38% level here. And if the market, if the Heikin-Ashi candles flip green down here, we're going to have a weekly deeper pullback squeeze on this pair. And we can also, the first pullback of a new trend, new crown pattern here. So we would buy that security, the Qs, look to buy the Qs. Just around there. And put a stop loss. This is put a stop loss right here. Under the cloud. Because this is a stage 2 pattern. So a stop loss under the cloud, and we can add position in here. Let's go to the Dow Jones now. Let's look at the Dow Jones. Same thing. The Dow Jones is being slammed. It looks worse than the rest. But if we look at the Dow Jones with the naked eye, market made a new high here, double wave down. It's following the same patterns. Even here, ABC up. It follows these same patterns. Dow Jones. Right? And it follows it really pretty well. Same thing here too. You have the A, B, C up. They have equal legs here and here too. Dow Jones is pretty good at these ABC patterns. Down here too, ABC, ABC. Now we're here at our C pattern will be the end of ABC completion will be here. Also, this will be a 1, 2, 3, 4, 5 wave. And a wave down here around 31,900. So I expect the Dow to fall down here. Also, this would be head and shoulders pattern here. That will be your left shoulder tip. Market fell, pull back, and target is right here. Target is right around here. So our target is here. Equal legs are here. Our fifth wave is here. So we should see the market pull back, retrace here, and find support. Let's look at something else too. What I'm looking for is to see if the market reaches 78%. And it did. It reached 78%. Because it reached 78%, I want to pull back that's from this low to this high. I would like to pull back. That's not greater than 618. So we surpassed 38%. We surpassed 50%. Well, we didn't surpass 50%. So, yeah, right in this zone, we have the Fibonacci 50%, 618. If the market surpasses this level, then I'll give up on the rally on the Dow Jones. Um, the last time we had a war was February of last year here. We had a big spike, and what happened, the market just spiked down and retraced. The same thing is going on here, except the market seems to have a huge move down. And I think usually when it comes to wars, you have a big spike down in the Dow Jones and then a big rally. But it happened last year with the Ukraine war, and you had a nice retracement here, but it didn't last long. It just fell down more. But usually the market will fall down when it comes to a war, find support, and then rally. So I think that's what's going on here. The war with Israel started around this area here, October 7th, sometime like that. So we have this move down in the Dow. I think we're going to find support here. We had a head and shoulders pattern here. This was the support of the head and shoulders pattern. It broke here, and this is the end of the target area of the head and shoulders pattern. So we should find support right around the 31,900 to 3,100 level, right around here. Okay, adding our indicators here. We see that the market had a double wave down. Yeah, a double wave down. Then it rallied up. And hitting that equal legs target. And now we have a first pullback, our second pullback in a bull market. Yeah, it still is a bull market. This will be our second pullback in the Dow. Yeah. Our first pullback. Our second pull. Gosh. Actually, no. This is then it renewed. It got reset. So this will be our second pullback here. Get this carefully. Yeah, this is our second pullback in a bull market. So we should prepare to just go long. We have 50% level here. We have a cloud support here. All of this is telling us that eventually this market is going to turn around, and rally up. You just need to be patient. Also the 3-bar rule, the 3-week rule. You see 1, 2, 3, 1. Yeah, same thing here. 1 up, 1, 2 up, 1 up, 1, 2, 3 up, 1, 2, maybe one more week, and then up. Here again, 1, 2, 3, then up. When we are in an uptrend. Of course, we have some. This is a complete downtrend here. Here's a downtrend, so it doesn't count. Right, but when we had an uptrend, we had like 1 or 2 bars going up. Right? 1, 2, 3, 4. At most 5 bars. 1, 2, 3, 4, 5. The same thing here. When we're in an uptrend. When we're in an uptrend, we will have 3 bars down, and then move up. And then some candle pattern tells us to change the trend. So so far we have 2 weeks down, maybe one more week, and then move up. But this move up is the end of all the 5 waves down, right? ABC down completion, pullback from this leg from the September 2022 leg to the high and pull back. This would be the support area of that leg, of that pattern. So let's look at our guppy waves. So those are my last resort. The guppy waves almost have turned around, but they're still green. They're still green. So this really could be some extreme here because of the situation going on around the world. This market is falling like hell. Okay, so I expect next week to be bearish once again and find support around this area. So maybe just don't do anything. Yeah. Next week, no trades. Just wait. German DAX, same thing. German DAX looks terrible. I thought that the market would have a turnaround candle here, but the German DAX, we had 1, 2, 3, 4, 5. This is the 6th week down, and there's no green candle yet. It's just down. It did reach equal legs. It reached the middle of the monthly band. Right? Go to the monthly chart. We see the middle band here. We have 3 months down here, and we have D3 candles, which means reversal volume here, D3 volume. So, and you're at support. So this could be, we look, and we have support here. This was the high of that candle, and this is the middle of this January 2003 candle. That's that got support as well. Middle of this candle here, that's a support. You have the Kijun here. We have a buy signal here. But this is a pullback in the German DAX as well. And German DAX seems to do that often. Let's see. It pulls back to these levels, special levels. Let's see. So I marked this low to this high, and we're at a 38% fib level on the monthly chart. We're at horizontal support on the monthly chart. 58% level would be here. Let's actually put that in. Let's put that in, the 50% level. Right at the Kijun. Right, I'll mark that as well. This is the Kijun of the monthly chart. So I know. So we're at horizontal support, right? The market found support this level before. Why can't it find support again? You have all these weekly candles here. Probability of it continuing is smaller, getting smaller. When we're at these levels here. And we're looking at the German DAX. Our indicators are at an extreme already. For the past 3 weeks, we're at an extreme. If we look at our histogram, we are at an extreme level of histogram. We haven't been here since July 2022. And our RSI is at an extreme. Together, this makes up our extreme divergence. And then we have a different type of indicator telling us we're at an extreme level. So, lining that up with support, monthly support. From my observations, the German DAX seems to move before the S&P 500. So, if the German DAX starts to turn around, we should expect the S&P 500 to turn around too, and this will give us a deeper pullback squeeze, because this will be the second retracement of an uptrend. This is just a pullback. Interesting pullback. Ooh, a round one. This is the ground pad. I did short it up here in September. Fell down. So I think this, and we're in the cloud now, cloud support. Yeah. So I think this could be the zone where we will find support in the German DAX. So next week will be interesting. Maybe fall a little bit and then spike and then create some type of doji. I really think a doji is possible here. Right? Let's draw another fib here. And we're well past 618. So I'll disregard that and just look at this level here for now in German DAX. So yeah, just wait and see what happens in the German DAX. Okay, let's move on to the some stocks. Let's look at stocks. What we see in stocks, this is looking at it technical, I'm not going into the fundamentals here. We're still in an uptrend in HURN here. It appears that in this weekly chart we have a hammer that has formed. A hammer with D3 volume is bullish, and it found support on the middle of the Bollinger Band. That is very bullish, plus the volume. So it seems to me that HURN is going to turn around. It's going to turn around and target is all the way up there. Maybe next year it will reach my target up there, but not anytime soon. Looking at a daily chart, it's looks like it's spiked down too. It spiked down. And we had an A, B, C equal A's completion right inside here, the cloud, and then a big spike. Earnings comes out next week, November 2nd. So there's nothing else to do. I expect the earnings to be good for this company. We have a hammer. Market's still bullish. Moving on quickly, let's look at another good one. ANET. ANET, if you look at it carefully, has been putting in higher highs and higher lows. Right? Even from before, it does the same thing. And when it falls down, when it retraces, it always usually hits the 618 level. And that's what happened here, and I bought it at 618. It retraced. It did one of these ABC things here. A, B, C, right? This is equal A's, this purple area. And then there. And so I added to its position here at this support level because of the past area. It always finds support at 618. And it always it's been making higher highs and higher lows. So there's no reason why this should stop continuing. So ANET. Also this week it found support at the middle of the weekly band here, and it found support on top of the monthly band. Yeah. Found horizontal support. We probably can even draw. You probably can draw the support too, a diagonal support, all lining up together. This is two cores. So, yeah. Seems to me this is an interesting trend. This trend has been going on since October last year, and it looks like it's going to continue. This is a nice area to buy. So I have about 0.3 in already, 0.3% in, and the target is 240 ANET. And earnings already came. Oh, I thought earnings came out already, but that was another stock. So we should see the same thing happen. Good earnings, and when earnings are good, I'll add more to this position. And based upon the past times that the market reached 618 and hit when it reached equal legs, or a new high, it would always go into this zone here, this Fibonacci time zone here. Currently, if this is the low here, if this is the low here, then we should reach the target by January 2024. And we're still in the uptrend as well. So if I add more to this thing, I think I would put my stop even lower, right? Down here. Go for that target here. It looks really good. I love this stock. I love this pattern of the stock. It's very clear. And it doesn't seem, looking at a daily chart, you can see the market falling down, but you see this stock rising up. It's very good. It's a very good indicator that this stock will continue higher next week when the market continues to fall down. However, we do have earnings coming out on Monday in the morning next week, so we'll see how this plays out. And if it's good and the market reacts well, I will add to it. Okay. Looking at a monthly chart, we can see we are in the GTAT zone. Market finds support at this level here, at the highs. Pull back to these high levels. Just seems to me that that this is really a really good. That's too far away. Because when the market has fell down to 618, it never looked back. So why change the probability of it? So just if I add to the position, just keep it the same. Keep the same stop around here, and then just add. That's why I bought down here, and I'm gonna add more. Yeah, I'll add more. Well, next week I don't know if it's gonna gap up or not, so I can't even mark that right here. Yeah, but I definitely will add more to this position next week after earnings. I didn't want to put a full position in, just a little bit. Okay, another stock I'm looking at. It's PW, PANW, but not the best one. BAH. I'm looking at BAH. This stock, because the way it moves. Same thing with this one. Actually, but earnings, I think earnings already came out with this one. Came out today. Yeah, it came out today. I was expecting the market to find support here, and it did. It found support in the cloud, my daily chart, and my stop loss was too close. I got stopped out. 0.2%. And I realized that my stop loss was too close the previous day, and I couldn't move my stop loss because the market was closed. And it gapped down and went to 618. And this is where, I I would enter. But I still have another position in with a further stop down. This is a good area to enter in with this volume here. Right? That's good volume. And it's just a pullback in a bullish trend. And it's found support at the mid band of the weekly chart. Cloud support. This looks good. So next week I expect to see uh the this candle turn bullish. Right. This thing also likes uh well, okay, I didn't study retracement, but it's making higher highs and higher lows though. Right. So since it didn't find support at 38%, I'm gonna move that. Right. They found support at 5618 level. That's too far. I'll keep it at 618, this level here. And I'll keep this here. No, my stop loss should have been down here, below this low. That's why I wanted to put it. Or under the cloud, but that's already closer to this level low, so you might as well just put it in this low. So when I get back in, let's stop that. When I get back in, I'm going to put my stop over here. Yeah, same thing. And target the same target. There's no point of squeezing, trying to squeeze that out. So you know what? Let's play it safe. My other stop is at 88 down here. Right. So I should add to this position next week. See what happens if it is turned bullish, and then I'll put my stop under this low here. Looking at McDonald's. McDonald's made an extreme divergence. Right? McDonald's made an extreme divergence in the RSI and histogram and our indicator, extreme indicator here, and starts to turn around with a doji candle. So I entered McDonald's, and then looking at a monthly chart of McDonald's pulls back to, it likes to pull back to the mid band, the midterm band and the deeper pullback band and rise up. It's been doing that for a long time now when it's in an uptrend, and the market still is an uptrend. And so I think here is the end of the month is almost, we have 2 more days left. So this probably would turn into a doji or something. I mean, McDonald's is finding support at this band once again from this measured from this level here, from this low to this high. The McDonald's reached the 618 level, and it seems like it's finding support on it. And we already have 4 months down in McDonald's. That's enough. It's too much already. McDonald's doesn't fall down that many months. And if it does, it's an extreme. And we're in an uptrend, so it's too many months down, and a lot of volume going in. McDonald's does have earnings coming out on October 30th on Monday. And I think this is too much, too many weeks down McDonald's. So it's better to just pile in. My theory, my thesis, my hypothesis is to pile into this stock, right? And see what happens. That's all I really can do. Just enter it and hope that the trend will turn around and move in my favor. And we're making higher highs and higher lows in McDonald's as well, which you can see on a monthly basis. Okay, let's move on to another one, MOH. Um, I don't like this stock much. I just put in 0.1% in. Earnings came out, it spiked down and then turned around. So, at my level when I bought it. Found support in the cloud. First pullback of new trend. So we should see MOH go higher. Of course, I'm not sure when it's going to reach my target, but usually maybe 5 months from now. Let's see how long it could take. I hope it doesn't take October 2024. That's too long, man. But it seems to be maybe by March, the way it's moving, the way it moves, by March 2024, it will hit target. March or February, the way it's moving. Okay, let's I'm also thinking, yeah, I bought Apple too. I bought Apple. There's Apple. I'm stalking Google because I think that it's too much down. Maybe one more week down in Google. Earnings came out on Google. They weren't bad, right? Sales increased, earnings increased. But we have this huge move down and found support at the Kijun. Next week, maybe a little bit down to this level here, this 38% level, dip level, right? I don't have a limit order in here. I just have an alarm here. In fact, let me put my alarm here. Just okay. So we're gonna buy Google. This is the pullback here, just like the S&P 500. Apple also looks like S&P 500 because it's big. No, not really. It doesn't look like S&P 500. But you can see Apple here. We have horizontal support. We have this trendline support going back to 2019. Right, hit about 1, 2, 3, 4 times. This will be the fifth time hitting. We have diagonal support 1, 2, 3 times. This will be the fourth time hitting. We have a minor downtrend here, right? 3 waves down, 1, 2. This is the third wave down, and we have support. I just bought it when I saw the bearish candle here. Also, this is a Fibonacci level, 618 level here, from the low of February 2023 to the high of July 2023. Let's draw another fib from January 2023 to the high of July 2023. Let's see where I already have it right here. I already drew it. So I don't know why. Okay, I see. So I have 50% in this buy zone here. 30% is a little bit too high. I did find support temporarily there, but came back down to more. So that's why I erased that. Okay. There's a 50% 6-minute confluence level here, and ABC equalates completion here, and an ABC muted wave here. This will be ABC muted wave here. I just bought this, and then my stop is here just in case it keeps falling down a little bit. I believe that I don't want to say I believe, but I think same thing. Like if the market falls down further next week, one more week down, we'll find support in this zone, and then again rally up. And let's look at our indicators. We had a cross in the Tenkin Kijin. Is there the bearish sign, but the rest are bullish signs here. Support here. And if we look at here, we have a 50 SMA here supporting the trend. 50 SMA. What else do we have? I'm looking for the middle of the monthly band, which is right here. That's a potential support as well. So we have several supports lining up at this level. We just need a green bar on the Heikin Ashi, a green bar in the regular price chart, a green week. Of course, I did buy it already. I bought it when my alarm sounded. I bought some of it, and just a little bit, like 0.1%. I probably should buy more, like a little bit more, maybe another 0.1%. Yeah, we'll see. I want to be cautious because the market is falling. Okay, looking at gold. Gold is just rallying because of this war here. We had a monthly signal to buy. I had some monthly signal to buy already. And a weekly signal to buy. I missed the weekly signal. No, I didn't take it. And we have a daily cloud breakout. It did retrace a little bit, but it didn't retrace enough to a point where I want to actually buy it. Yeah, it just kept going, just keeps going up. And the breakout happened, but the Tenkin Kijun cross happened after the breakout. So this is not a breakout to trade. The breakout has to happen. All the indicators have to line up at the same time when we have that breakout. I passed this trade, so I'm not in gold. Let's look at oil. Oh, Bitcoin. I did buy Bitcoin here. I bought it right here and holding it. I don't know why it's going up, but it's going up. U.S. oil. I'm in U.S. oil. We can see from a monthly chart that U.S. oil broke out. U.S. oil broke out here in August and then pulled back down in October. Found support on the top of the cloud. Okay, after that breakout in August, we had a breakout on the weekly chart, pulled back to the cloud, tested it successfully, right? And the market's going flat, but it definitely tested it successfully with these inside bars. And candles, Heikin Ashi flip colors, flip back this week. But so far it's bullish. Let's see if we had a good breakout, a valid breakout here. This was a valid breakout here, a valid breakout. So the time to enter was this bar here on September 5th. I entered it somewhere around October 16th. or it probably was September 11th. I don't know. Remember, maybe but it was definitely around here. Oh, I entered it when it pulled back, hit the cloud, tested it successfully, and started going up. So I entered it here. And my stop loss is under 618. So I measured a fib from this low to the high, and it pulled back to 38%. My stop loss is 2 fibs down under here. So and we have cloud support as well. That's a lot of support. And it's under the weekly band or standard deviation band. So we have a lot of support that needs to be breached before we reach our stop. So this is a safe area to go. And I think that oil will rise to 100. Right? If the war continues to go further on and escalate, this market will continue to rally to $100 a barrel. And if that's the case, we should see, if we look at our currencies like Canadian dollar, that should support currency like the Canadian dollar. We'll look at that later. The EG, same thing. EG came out with earnings today. Our EG came out with earnings on Wednesday. And then the market fell down, found support. And at the bottom of this line here, and I added 0.1% risk to this EG. And same thing, if we look at a weekly chart, we can see it broke new high and pulled back to test the support level, test this horizontal diagonal support level, test the fib levels, found supports. And on the daily chart, you can see this is an ABC down wave completion, and it found support here on the trend line. You can see the trend line support here. That is a mid-band squeeze. We can see the band seems to be squeezing. Our Heikin Ashi hasn't turned color yet. However, we did get a doji, spinning top candle on a daily chart. So far, this is a good sign. The market stopped here, good volume here, and we're still in the uptrend. Go back to the weekly chart. Yeah, we're still in the uptrend. We found support on the Tenkan here, and the backside of the mid band. Sorry, the Bollinger Band, and its first standard deviation. So, this stock is performing well, even though the stock market is falling. So when the stock market rises, this should really propel up. I think I have about 0.2% in total in this stock. If not, I will add another 0.1%. I think my plan was for the stock will fall somehow to 363, and I will add another 0.1%. So yeah, I'm saving another 0.1% if it falls down to this level. But from the looks of it, it doesn't seem like it's going to fall down to that level. So the price is making higher highs and higher lows on a daily chart. Okay, so let's move on. We looked at gold, and I'm going to move on. Those are my favorite stocks so far. I like, I'm in Walmart as well. Walmart has earnings coming out, but it's not falling. as much as market is falling, Walmart still bullish. Somehow it's still bullish. Fell down for 3 days straight, and the fall had lower volume each time. So I think the market, Walmart will just rise. Actually, there's no rejection. Much rejection. Costco. Let's look at Costco. Costco looks terrible. Costco has been falling down for more than 5 days straight, 2 weeks straight. But if we're in an uptrend, this probably will be the last week that it will fall down. And probably will find support at this first standard deviation, this level here. That's what it seems to me. We'll find support there. We're making higher highs and higher lows. This is the second pullback of the new trend. Right? So yeah, I have 0.2% and maybe 0.1% in Costco, probably 0.2. I forgot. Uh, but I think earnings already came out for Costco. They weren't that bad. This is not a super stock, it's a slow stock. So I don't expect it to jump up, 1,200,000% in 5 months like other stocks are. I mean, so Costco, this is a good stock to buy if it gets to this level here next week or falls. Maybe a stop loss here. Target. Target up here. You know what? Make it two. Make it like that. I think I bought. I forgot where I purchased it. But if it's up there, then it's gonna suck. My profit will suck. Uh, but yeah, if it's making higher highs and higher lows, then the market should not penetrate this low here. I think that's where I bought it. I fixed this here. I purchased the Costco above this high here, and I thought it will break out above this box here. Break out, pull back instead. My stop loss is here. I risk 0.2%. So and my target is somewhere even higher. Somewhere right there at 700. Somewhere at 700. Yeah. So earnings had already come out, and the reason why Costco is falling is because the market is falling. I think that I will add 0.1% to here when it reaches here, this level, and see if it can go up to the same target, 700. Right, much better. And 2.1 out of 5 for 6 to 1. If it goes here and finds support, I went into there and what? Maybe even put my stop loss under. Yeah, probably here. This is safe to put it here under this 50 level here. And that's only 0.1%. So if it does react there, I'll put my stop loss under the key June here. just on this swing low here somewhere. Um, let's see what happens. If it reacts there, it probably will be it probably will be too late. And I mean, what I mean is the price will probably move up like that, and I'll get in up somewhere up here. So anyway, for now, yeah, we'll see how the market reacts at that level. Uh, it almost looks like S&P 500, but a little better. 2 weeks down. I didn't look at the daily chart yet. There's no need. I did look at the daily chart. There's no need to look at the daily chart. This. We're looking at weekly charts. So yeah, one more week. Just one more week. Let this month end, and this month is flat. Look at this month compared to other months. It's flat. This was a NR7 candle, and then this kind of the widespread. So it's been flat for 2 months. This is the third month. We have a little retracement in Costco. It hasn't retraced that much, just compared to the stock market, compared to S&P. So I really think that we'll find support here. Market will find support here, and I'll just add. I'll add more to it down here. It's a good bet. Good thing. I'll add to 0.1%. And if it hits my target, it would, I will increase the reward, to 1% instead of just 0.2, because that can take many months, like next year, to reach a target. It's just will be 0.2 target. That's a waste of time. Let's see. I looked at ANET already. I didn't look at Microsoft yet. Microsoft, we had good earnings. It gapped up, but found resistance here. And I'm holding it, hoping that next week is a good week. Gapped up, pulled back, and went flat. So, made it high though. Made it high. We'll see what happens. It probably will consolidate. It's still the same thing. The market's falling, but Microsoft is not falling as much. So we have a bullish news for Microsoft. All right, I didn't look at the dollar, did I? I didn't look at the dollar. Looking at the dollar here, dollar is on the bull. Dollar's been going up many weeks. This bull, and I think there's no reason why it should turn up. It's just a bull tear. Looking at a monthly chart, we can see why. You can see this pullback and tear up in the dollar, right? And that was a signal to go long in August in the dollar. And this is the first pullback of the new trend up. So dollar should keep going. And this makes me think about the stock market. Will the stock market and the dollar go up at the same time? And gold? Something has to give. Looking at the dollar here, let's go to the floor and try. Let's go to this. So we can see we have a double wave down on the dollar, found support here. We had a deeper pullback, squeeze, big engulfing candle. So that's so bullish. the dollar. And it already reached 50.5% already, but now will continue to at least go to this high here, like 1%, like one to one. We'll do that, and the way we'll find out is by drawing some trend lines here. See that it broke out of that here, like this market squeeze, and we have our um, Tenkan and Kijun sloping up. If we go to a 4-hour chart, we see the breakout here on the 4-hour chart. We draw more lines here. We had a wedge pattern, we broke out. Pull back. Came up. Double wave down here. A double wave down here, ABC down. And then a breakout here. This is a valid breakout if you look at it. It's a valid breakout. Here. Here. We had a valid breakout here. And if we weren't sure, we had a pullback here. After the pullback, we had a tweezer top. I'm sorry, tweezer bottom, and it pulled back to 38%, near 38%. That's why it looks better on this on the dollar index, pure dollar index, on a daily chart. You see, we have this breakout here with the 4-hour chart. Easier to see. This move here, pull back, and give it a signal to enter. It's easier to see on here. This would have been an entry. Okay, that would have been a target. And then double wave down. ABC down. Right, there it is. ABC down. And then a breakout. And then pull back, breakout. And this breakout wasn't valid. It wasn't valid, but we had the pullback. So this is the first pullback of new trend, and hit the backside of this trend line, hit the Kijun, and then we had the engulfing. We had a wick, we had the engulfing pattern. So, and we had a new high here. Right, that's a new high. So we can start drawing our ABCs. Right? And we can project where C is going to be. Right? C is going to be somewhere up here. So we should have, when we have that rally in, let's see, let's just use 127% just in case. So somewhere up here is going to be our target for right? The dollar. We have a hammer candle here. right? So it looks bullish. It went flat, and found support here. The Kijun trend bounce, medium term pullback, confluence, and a morning star. It's went up. It's going to go up, and then this is just a pullback here. ABC. So we should expect the dollar to rally next week, which means as the dollar is rallying, we should be selling other pairs. So with that said, let's look at Euro USD. So the dollar is going to rally. This is a daily chart. This is not a weekly chart. On the weekly chart, we can see that, oh, if it rallies, wow, S&P stocks will just collapse further. Gold probably will rise further, and oil. So we're gonna have more calamity next week. This is gonna be a strong rally in the dollar if it does rally next week. Oh my gosh. Um, let's look at natural gas. I purchased it here and I bought it here again October 25th. And today it spiked. I don't know why. I was expecting it to keep rising. From a Heiken Ashley perspective, this is still bullish. It's still bullish candle. It's already scaring me. My stop loss is at break even already. So I don't know if this thing's gonna fall down and, you know, but that's a, that's a, that's a scary spike. But I think that maybe I can see if I can hold through it. That's natural gas. That's gold. We looked at oil already. Let's look at Euro USD. Euro USD. The same thing happened with Euro GBP, and I got scared out here when I saw this candle. I scared out, and then it just went flat. So Euro, it's hard to predict. Euro USD. I sold up here somewhere and fell down, and we have these wicks, but we see the dollar. We see the dollar on the 4-hour chart that the fall should still continue, and we see that we did have a fall on the 4-hour chart here. It's more clear on the 4-hour chart, and we had this bearish candlestick supporting the fall. Let's go back to that dollar chart, engulfing bullish candlestick in the dollar chart. So the downtrend in the uptrend in the dollar should continue, which means that the downtrend in the euro will continue. So I'm short this, and I'm definitely scared. I'm almost scared to hold this because I don't want it to come back up here and stop me off. So I'm short, currently short. Looks like from the evidence that we've seen, if I'm just a little bit patient, we should get a drop in the euro from there sometime next week. Maybe Friday. Maybe Friday next week, Tuesday, Wednesday, Thursday, Friday. That's a lot. That's many days, right? Non-farm payrolls. That's a long time to wait. Maybe we'll go up. I don't know. Next week is U.S. non-farm payrolls, so that will move the markets. Thinking next week also is Euro CPI, and the JPY Bank of Japan policy rate decision. So looks like if euros, I think Euro CPI looks like the data suggests that it's not growing. CPI not growing. So that can support the pressure on the Euro USD fall. Same thing with GBP USD. We have pressure for it to continue falling. We have this cup with handle pattern here. Look at it clearly. Cup with handle pattern. Cup with handle pattern here. So it looks like GBP USD was clear to fall. We have a wicked daddy pattern here. Short. Right? Keep it pulled back here. Short here. We have Heiken Ashi already turned color. Tell us a short here on this candle. October 25th was the candle to short. This candle was the candle to short. So we just stop loss above here. And most likely, I have a big target here. I have a monthly target. It's at 105. And that's based on the monthly chart here. Monthly chart gave us a signal, and it gave us it gave us triggered the monthly signal here as well. Monthly signal was triggered short. So I'm in Euro USD waiting for it to fall. I'm in GBP USD waiting for it to fall. I'm in Euro USD waiting for that to fall too. GBP CAD, because of the war, I believe that it's weakening this pair. So what we see here on the weekly chart is a head and shoulders pattern. The market fell down sharply with almost 1, 2, 3, 4, 5 candles in September, right? Huge candles going down, and then when it tried to rally, you can see this straggling so far. You had like 2 weeks up and 1 week down. 2 weeks up, and it's at resistance. So most likely next week we should see a fall in CAD GBP Canadian dollar. And forgot to mention, next week the UK has a policy meeting on Thursday to determine whether or not they will raise rates. According to Forbes Factory here, let's see, we have the previous and we have the forecast. Thursday. The previous is 4.0405, and you see that they're going to be dovish, right? You see that it's in a different format from the U.S. format. It's how many MPC members voted to increase interest rates. The second number is how many voted to decrease interest rates, and the third number is how many voted to hold rates. So we see 2 voted to increase rates, 0 voted to decrease rates, 7 voted. More people voted to hold rates. Last time there were 4. Now you have more of them saying to hold, and they will hold rates at 5.25. So based on that, VBB CAD will be neutral. Most likely it will fall and rise. And oil increasing is good for the CAD. So um, eventually this is going to drop the way it's moving. It's at the weekly resistance, teaching resistance. And the TK cross that happened here. This is the 50% Fibonacci level. So yeah, the Fibonacci level, Ichimoku level of influence here. You also have the midband of the weekly chart nearby. The upper portion of the weekly band, weekly Bollinger Bands here as well. But if you look at it on a smaller time frame, it's been rolling, rolling here. We've right. It's been bullish. However, it reached the cloud on the daily chart, and it reached ABC wave up here. Wait, not equal legs. Equal legs is up here, but it reached muted wave up, which is a sell zone, which matched the Kijun. So I use the muted wave here. So this would be if the Heiken Ashi changes color, this will be a deeper pullback squeeze. And we see the Bollinger Band squeezing as well. So all we need is a bearish day, solid bearish day here. We already see the price. It's not a strong, solid candle. It reacted to that level here at 1.68555. So most likely, looking at the probability of this stock, it's in a downtrend, and most likely it will fall down eventually. And because this crown pattern, this head and shoulders pattern, happened before the crown, before the break of the cloud, our stop loss goes above the high. And that's where it's near the high, where the high is into. It's so under the high. And we had ABC extension. So this will be the X, W, X, Y. And we just need to wait for it to go there. Let me see. And its level is the same level as the February 2023 low. We'll target for the WXY pattern of 1.612. So, according to me, everything looks bearish, right? And we have our indicators telling me to short here. Extreme indicators telling me to short. Like I said here, weekly BBT. And look at the monthly chart. We'll look at that here. Monthly chart, we had a pullback, and we had a engulfing pattern, bearish pattern, and a pullback. Let's pull back from here to here with a 618. No, with a 78% pullback. 78% pullback. I'm not going to keep it there. Yeah, we had a pullback and an engulfing bearish pattern on the monthly chart. If this month doesn't fall down to 163.83, this will be inside monthly candle next month. So it's really a wait and see here. Um, I put a 1% risk in it. See what happens. I was long this USD Canadian dollar, but I got scared out. Got scared out here and took profit. And that's what I hate. When I get scared out, I really hate when I get scared out. And I have my stop loss. I shouldn't get scared out. Okay, so one thing I'm looking for to next week is this pullback in CHFJPY because we have the rates coming out next week. So I believe that CHFJPY is just pulling back to one of our fib levels. And it pulled back to the first standard deviation of the chart. This is also the BBT level of the daily chart at the same time. So that's one level. The second level is for to go down to fib, almost just like the stock market. Right, retrace down to the 38% level here. And then when the interest rate decision comes out, when the interest rate decision comes out with the JPY, the Bank of Japan, I think it's just gonna just rise up. A lot of these JPY pairs are retracing. I think that it will rise. It will go here and then rally up because we do have a new uptrend in the CHF JPY. This is the first I did buy it here and I took profit and now it's retracing. So you can see my Ichimoku indicator, MACD indicator, and we have a new. We went into the golden zone, and the Kijun went above the waterline. So our pullback looks okay. The volume decreased when it fell. Looking at the weekly chart, started nothing. Volume decreased when it fell, so that's a D3. There's a chart. We're bullish here. Looking at our account, we're in the monthly trend zone. Right, so it's bullish. So what we can expect is for there's a support here, right? This level here, when it went flat, support. It broke out and it's testing that support this week. And I was at that level. So that seems like some important level. So next week, as the stock market falls, this should fall down too. The CHF should start falling down to this level or to the cloud level. And I have a limit order in place. I put a 1% risk in. Stop loss is under the RLO. And just hope that the Bank of Japan doesn't raise rates. Most likely they won't. Most likely they will keep rates flat on Monday. They come out Monday night. Just going down too far. So right here. They should keep rates negative. And that will just make the JPY fall. And give us opportunity to buy the CHF JPY. What else fell was the USD JPY. It went above 150 and pulled back. But the problem with this instrument is I don't see a pattern. So, well, this would be, in the daily chart, we do have a pullback. A shallow pullback. Yeah. Will be a shallow pullback. And then next week, if it rises above the Tenkan, then that will be a buying signal. But I don't want to trade this shallow pullback. I just don't. And I'm already in Euro USD and some other USD pairs, so I don't want to enter in those. Enter in USD JPY. I prefer AUD JPY, which on the weekly chart has gone flat, clear, breakout, pull back here, maybe here, C, and the quarterly chart has a inside bar here on the second quarter. Sorry, the third quarter. Third quarter of October 2024. We have an inside bar. And we're inside that inside bar. And it looks like any fundamental news that breaks this, well, any fundamental news can tip this up and break it and make this breakout. And also, this is a weekly triangle pattern. It's definitely consolidating here, right? That's why you have no strong candles. It's wicking here. But I think it's better to just get in. And because I know already that the Bank of Japan is not going to raise rates, keep rates the same. I'm just best to just get in and don't get in late when it breaks out. Just get in the consolidation. Put your stop loss somewhere really safe, like under the cloud. Right here, that's where I put it. And cross fingers. So that one, AUD JPY and CHF JPY. Yeah, I want to buy it. And I'm not going to get shaken out. I think that's it for the currencies too. So I'm going to end the video here. I don't really see anything else that I'd like to talk about. So let's look at the 10-year yield quickly. 10-year yield rose to 5 and pulled back. That's all we know. We have a short-term pullback. Sorry, shallow pullback here because it closed below the Tenkan. So next week, the 10-year yield rises back up above the Tenkan and closes. And that'll be a new trend. And we should expect, if it does do that, let's rise up somewhere like that. You should expect prices to rise back up to 5% again. I don't see this trend changing anytime soon. Looking at a pull out the chart, it's just consolidating. All right, I'll end the video here and let's hope for the best next week. Talk to you later. Bye bye.